In an ever-changing market, information as to marketplace performance and economic forecasts are critical to the decisions one makes when managing their commercial property portfolio interests and overall investment goals.
Often the narrative is complex and in conflict from one source to another. For this reason, Allard Shelton bring you The View.
Here we are in Melbourne's prized Chapel Street Precinct, the retail heart of the Stonnington municipality. But what drives growth in this area? Today we examine marketplace performance, recent developments into the precinct, and importantly, key drivers of growth moving forward. Insofar as marketplace performance is concerned, there's no question that the broader Chapel Street Precinct has come under enormous pressure in recent times. Retail rentals on a rate per square metre basis range from as low as $500 per square metre up to as high as $1,200 a square metre, dependent upon where you are within the broader Chapel Street Precinct. Vacancy rates have grown excessively over the past 12-month period, with areas like Chapel Street, Windsor, going from a 4% vacancy rate up to 11.3%. In addition to that, areas like South Yarra currently sitting at a vacancy rate of some 18.1%. The Chapel Street Precinct is going through a transformative phase, which is seeing a full recalibration of the tenancy mix within the broader area. In spite of some of that negative sentiment, Allard Shelton remain supremely confident in the retail market from a longer term perspective. An attitude which is underpinned by current buyer demand, which has an appetite and comfort at yield ranges between 3.5% to 4%.
Key developments in the area that will further enhance the retail precinct include Newmark Capital's Jam Factory project, Spotlight Property Group 402 Chapel Street development, Goldfields Group's 627 Chapel Street, and also Capital Grand's $800 million mixed-use development.
We've touched on retail activity and future development in the area. Now we take a closer look at key market drivers. South Yarra has enormous population growth over the last 10 years of some 43%. It's anticipated that over the next decade that the population will continue to rise at a similar rate. The South Yarra office market is set to double over the next 4 years, with an estimated 80,000 square metres of additional office space coming to market. We understand 50,000 square metres of this space has already been pre-committed. With those things considered, we anticipate a resurgence and a greater need for retail and amenity within the immediate area.
Allard Shelton have skill and experience beyond that of any of our competitors. Should you have a commercial property matter that requires advice, please don't hesitate to contact the team at Allard Shelton.